Today, Bitcoin finds itself in a bear market as it struggles between significant price points. Meanwhile, Solana's new governance structure could reshape its ecosystem. Let's dive into these stories and more. Here are today's top 10 stories you need to know. In the latest market developments, cryptocurrencies from the Polkadot Ecosystem and the XRP Ledger Ecosystem have emerged as the largest gainers in the industry. This rise comes amid a backdrop of regulatory clarity for XRP, following a lengthy legal battle with the SEC. Investors are increasingly drawn to altcoins that showcase strong fundamentals, particularly those with robust interoperability features like Polkadot. The renewed interest in these ecosystems indicates a significant shift in market sentiment. The overall crypto market capitalization currently stands at approximately $2.23 trillion. Investors are keenly observing how these dynamics will evolve as regulatory frameworks continue to solidify. As these cryptocurrencies gain traction, it remains crucial to watch how they influence the broader market landscape. The increasing interest could signal a rotation from Bitcoin and Ethereum into these promising altcoins. Moving forward, analysts will be monitoring if this trend sustains and how it impacts the overall market. Bitcoin has experienced a notable decline of 14% in the second quarter of 2026. This drop has coincided with the first contraction in the stablecoin market since 2023. The contraction suggests a reduction in liquidity and diminished on-chain activity, which could exert downward pressure on altcoins. As Bitcoin's dominance remains high at 55.7%, the implications of this decline are being felt throughout the crypto market. The global cryptocurrency market cap currently sits at around $2.23 trillion, but concerns are mounting regarding the overall stability of the market. Analysts believe that the contraction in stablecoins could lead to greater volatility in the coming weeks. Investors are now questioning the sustainability of Bitcoin's current price trajectory. As we look ahead, the market will be watching closely to see if Bitcoin can recover or if this trend signals deeper issues within the crypto ecosystem. In a strategic move, Robinhood is expanding its cryptocurrency offerings by introducing new blockchain, tokenized stock, and DeFi products. However, the rise of faster-moving prediction markets could pose a challenge to Robinhood's crypto ambitions. This trend highlights a significant shift in investor interest, as more users are attracted to real-time, outcome-based trading platforms. The competition in the crypto space is intensifying, and Robinhood is positioning itself to capture a larger market share. The company aims to leverage its established user base while adapting to changing market dynamics. As Robinhood deepens its investment in the crypto sector, it remains to be seen how this will affect its overall platform success. The growing popularity of prediction markets may shift user preferences away from traditional crypto trading. Looking ahead, Robinhood's ability to innovate and respond to emerging trends will be critical in maintaining its relevance in the evolving market. A U.S. Bitcoin Treasury company has made headlines by liquidating all its BTC holdings. This drastic decision was driven by pressing debt repayment needs and mounting pressure from Nasdaq, highlighting the financial strain many companies face in the current economic climate. The liquidation represents a significant signal of distress within the corporate Bitcoin treasury sector, which has seen increased scrutiny amid ongoing market volatility. Investors are now questioning the sustainability of corporate strategies heavily reliant on Bitcoin, particularly as prices fluctuate unpredictably. This move raises urgent concerns about the future of similar companies with substantial BTC exposure, as they may also be forced to reconsider their investment strategies. The liquidation could have broader implications for market confidence, as it underscores the inherent risks associated with corporate investments in cryptocurrency. As the market responds to this event, analysts will closely monitor the potential ripple effects. The future of Bitcoin treasury strategies may hinge on companies' ability to adapt to these rapidly changing market conditions and investor expectations. The upcoming Alpenglow upgrade for Solana is generating significant interest among investors and developers alike. This upgrade aims to replace Solana's current consensus mechanism with two new components, Votor and Rotor. Votor is designed to achieve block finality within 100 to 150 milliseconds, while Rotor focuses on enhancing data propagation efficiency. These changes are critical for Solana's scalability and performance, especially as it approaches the ETF deadline set for March 27, 2026. Investors are keenly aware of how these improvements could position Solana favorably in the competitive crypto landscape. The potential for increased transaction speeds and efficiency could attract more users to the network. As the upgrade rollout approaches, the market will be closely monitoring its impact on Solana's ecosystem and broader adoption. The success of Alpenglow will be pivotal in establishing Solana as a leader in the DeFi space. Ripple has made significant strides in achieving regulatory clarity following a landmark partial legal victory in its ongoing lawsuit with the SEC. This pivotal resolution has reignited institutional interest in XRP as the previously murky regulatory landscape begins to clear. Historically, the SEC's actions against Ripple had created uncertainty, stifling potential investments in the cryptocurrency market. However, with the pending application for a spot XRP ETF, optimism is surging among investors. The SEC faces a crucial deadline to rule on multiple crypto ETF applications by March 27, 2026, and Ripple is strategically positioned to benefit from a favorable outcome. Moreover, the XRP Ledger Ecosystem has demonstrated remarkable resilience, with cryptocurrencies within this framework experiencing substantial gains. This renewed confidence is prompting investors to view XRP as a compelling option for their portfolios. The clarity surrounding Ripple's regulatory status could pave the way for increased institutional investments in the future. As Ripple continues its dialogue with regulators, many expect significant advancements that could reshape the cryptocurrency landscape. Ethereum is currently undergoing a significant transformation, splitting into three distinct power centers. These centers include ETH, which focuses on Treasury-backed research and development, Ethereum Institutional, which serves as a corporate front door, and the core protocol itself. This new structure reflects a shift in how Ethereum's development and corporate strategies are organized, driven by increasing funding from ETH treasury firms. The anticipated network upgrade, Glamsterdam, aims to boost Ethereum's throughput to approximately 10,000 transactions per second. This upgrade is crucial as Ethereum faces intense competition from newer blockchain technologies that promise scalability and efficiency. The evolving governance structure may attract more institutional interest as clarity around Ethereum's growth strategy becomes increasingly apparent. Moreover, this restructuring could lead to enhanced collaboration between developers and businesses, fostering innovation within the ecosystem. As these changes take shape, Ethereum's ability to maintain its market dominance will be closely scrutinized. With the Glamsterdam upgrade on the horizon, the platform is poised to redefine its role in the rapidly evolving blockchain landscape. The SEC is currently facing mounting pressure to make decisions on a significant number of pending crypto ETF applications, totaling 91 submissions that encompass 24 different tokens. Among these are the highly anticipated spot applications for major cryptocurrencies like XRP and Solana, which have garnered considerable attention from investors and analysts alike. The deadline for the SEC's rulings is set for March 27, 2026, making this a pivotal moment for the cryptocurrency market. Historically, the approval of crypto ETFs has been seen as a crucial step towards legitimizing the market, potentially unlocking billions in institutional capital and fostering broader acceptance. SEC Chair Paul Atkins has reiterated the agency's commitment to positioning the United States as a leader in the global crypto landscape. As the deadline draws nearer, market participants are bracing for heightened volatility, given that the outcomes of these applications could reshape market dynamics for years. Investors should prepare for significant price movements as the SEC's decisions unfold, with the potential for transformative impacts on the cryptocurrency ecosystem. The next few months will be critical in determining investor sentiment and market stability. Solana has unveiled a new governance system that empowers stakers to challenge the power of validators in upcoming votes. This overhaul addresses one of the network's most significant tokenomics debates, which has been a contentious issue among community members. By allowing stakers to have a more direct say in decisions regarding SOL inflation, Solana aims to redistribute influence within its ecosystem, enhancing democratic engagement. The pending Alpenglow upgrade is set to further bolster this governance structure by introducing new consensus mechanisms, which are designed to improve decision-making efficiency and transparency. This shift could fundamentally change how inflation decisions are made within the network, potentially leading to a more balanced power dynamic among stakeholders. As Solana navigates this transition, the implications for community trust and investor sentiment are substantial, especially in a competitive DeFi landscape. A more inclusive governance model may attract greater participation from stakers and investors, fostering a sense of ownership and responsibility. The broader impact of these changes could position Solana as a leader in blockchain governance innovation. Looking ahead, the successful implementation of this governance overhaul will be crucial for Solana's ability to sustain growth and adapt to the rapidly evolving cryptocurrency market. Bitcoin has officially entered a bear market as it begins the second half of 2026. The current price volatility is centered around a critical test between $100,000 and $50,000. Recent outflows from exchange-traded funds, ETFs, have heightened concerns, leading investors to question the sustainability of Bitcoin's price. Coupled with Federal Reserve interest rate risks and strategic shifts from major players like MicroStrategy, July has emerged as a pivotal month for Bitcoin. Currently, Bitcoin is testing the $58,000 mark, indicating a lack of strong buying pressure, which could signal further declines. Analysts suggest that a drop toward $53,000 will provide insight into whether the demand from the ETF era can continue to support Bitcoin prices. The dominant narrative in the market remains focused on the sustainability of Bitcoin's price amid these challenges. With Bitcoin's market dominance at 55.7%, many investors are reevaluating their positions and strategies. The outcome of this bear market phase could have far-reaching implications for the future of Bitcoin and the cryptocurrency market as a whole. If Bitcoin fails to regain momentum, it could lead to a prolonged downturn, impacting investor confidence and market participation. Moving forward, market participants must closely monitor Bitcoin's ability to navigate this turbulent landscape, as its next moves will shape the future trajectory of the cryptocurrency ecosystem. Thank you for watching today's news roundup. Which story shocked you the most? Let us know in the comments. And don't forget to like and subscribe for more updates.